Thank you, Cheryl, and good afternoon, everyone. Thanks for joining us on the call today. I'm going to walk you through our Q2 progress against our key financial metrics related to revenue, users, and expenses. As Cheryl mentioned, revenue in the second quarter was up 32% from last year. The strengthening of the dollar cost us a few percentage points of revenue growth, which would have been 36% with constant exchange rates. Ads revenue was up 28%, driven by an 18% increase in the number of ads delivered and a 9% increase in the average price per ad. The increase in ads delivered was primarily due to user growth and also benefited from the net effect of product changes that increased the average number of ads per page relative to last year. Ad impressions continued the recent trend of growing more slowly than users as more of our usage is on mobile devices. This trend is particularly true in markets such as the U.S., where smartphone use is expanding rapidly. The overall number of ads delivered in the U.S. this quarter decreased 2% year over year, despite a 10% increase in daily users and despite the increase in ads per page from the product changes I mentioned earlier, as daily web users in the U.S. declined in favor of mobile users. And we're seeing similar trends in other developed markets. The 9% increase in price per ad was driven primarily by the United States, where CPMs increased by over 20%, due in large part to the ramp-up of sponsored stories in News Feed on both PCs and mobile devices. Sponsored stories in News Feed are displayed where the user's primary attention is and are stories that we believe users will find engaging based on their interests and connections. That makes sponsored stories in Feed more relevant, resulting in stronger click-through rates and higher prices. Price per ad also increased significantly in Asia and the rest of world markets. These markets are growing more rapidly in terms of users and therefore are receiving a growing share of our ad impressions each quarter, so we're pleased to see continued improvement in pricing. The relatively faster volume growth in Asia and rest of world does have the effect of reducing our worldwide average price per ad due to the relatively lower pricing in those markets. In Europe, price per ad decreased a few percentage points compared to last year, similar to what we saw in Q1, and we believe due in large part to the overall macro environment there. Over the long term, we continue to believe that we have a significant opportunity to increase CPMs. There are a number of potential drivers, including increasing the number of sponsored stories delivered in News Feed across desktop and mobile, improvements in our ad products, including better targeting capabilities, increased advertising demand as we continue to demonstrate ROI and as our clients get better at creating social and engaging ads, and overall growth and development of online ad markets globally. Payments revenue for Q2 was $192 million. For the past 3 sequential quarters, payments revenue has been essentially flat. We believe this trend is due to the fact that gaming in general has been growing mainly on mobile devices where our payment system is generally not utilized. We're continuing to invest in the gaming ecosystem on Facebook.com, for example, with our new Facebook App Center, which is designed to help people discover new games and other types of apps as well. In terms of revenue per user, ARPU increased by double-digit rates in North America, Asia, and rest of world, and by 8% in Europe, and worldwide ARPU was $1.28 in the quarter. Our higher user growth in geographies with relatively lower revenue works to weigh down worldwide ARPU and the global growth rate. Staying with user metrics for a minute, we ended June with 955 million monthly users, up 29% from 12 months earlier. On average in June, 552 million people accessed Facebook each day, up 32% from a year ago. Relative to last quarter, Brazil, India, and Japan were key contributors to our growth in daily users. 58% of our monthly users were active daily users of the product, which we view as a positive measure of user engagement. And in addition, engagement patterns remained steady or grew across user groups, as measured by the percentage of people creating content or providing feedback, such as likes and comments, and by the amount of content and feedback created per person. We're encouraged that growth and engagement have remained strong as our network has expanded and as we've added later adopters to the service. We view this strong engagement as a sign of the utility of the service and the network and as the foundation for everything we're trying to accomplish.